Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis for March 8th, 2010. I have logged into tradingdesk.stockscores.com and I'm going to take you through the charts of some of the important indexes for the stock market, currencies, and commodities that I like to look at each week and try to give you an impression of where the market is likely to go in the near term. Let's jump to the slideshow view from the table view, which is what we are in now. I'm going to click on slideshow, and that will start up a presentation of the charts that I like to look at each week. These are exchange traded funds representing a number of different things. This one is DIA representing the Dow 30, and you can see that after breaking an upward trend line about 6 weeks ago, we fell back, we broke that fallback, and now we are in a short-term upward trend that is likely to end soon since we are nearing resistance at the old highs from the start of January. So my expectation is that in the next little while we'll probably get up to there and then we will get stuck. Now the Dow is falling a little short of some of the other markets, and I'll show you those as we go through this presentation. But here, for example, is a chart of the Canadian dollar, which is actually bumping up against resistance, or at least very close to it. And so my expectation is for the Canadian dollar to get stuck very soon, somewhere around 97, 98 cents on the US dollar, and then probably start to head lower again. So I'd be a little bit cautious with the Canadian dollar if you're thinking about switching Canadian dollars into US dollars. Now is probably not a bad time because it's likely that we will get stuck soon. The gold ETF had a little bit of a bad day today, and that is something of a concern because this very short-term upward move was broken. Not a big concern, however, because the longer-term, not really long-term, but the medium-term little trend there is still intact. I expect gold to pull back into here and then bounce and move higher, but it's going to get stuck at that resistance there. So, I think that gold looks more likely to go lower than higher, but the upside is not sufficient enough to compensate us for the risk. So in general, I would probably shy away from trading the gold stocks now, unless it was an individual stock that was really moving on its own story. This is a chart for oil, and oil has been locked in a trading range for some time. And we can draw some lines on here to sort of define that range. Again, maybe another couple days of upside before it gets stuck and moves down. We could see it move to this horizontal line of resistance, but either way, there's lots of resistance to hold back oil in the short term. So I think you could see some profit taking in the oil stocks in the near term. Now the Nasdaq market is looking better than the Dow, because if you remember from the chart we just looked at, the Dow was falling short of resistance and the Nasdaq is actually up to it. Now, something to keep in mind, a little trick that I like to watch for. When stocks or indexes are rallying into resistance, they are more likely to break through and continue their upside if they actually get a little bit through resistance and then fall back. Now, the alternative is that these markets fall short of resistance and then they break down. Either way, it's very likely that you will see some selling pressure at this line of resistance that I've highlighted here. The question is, do we get a breakout through it, or do we fall short of it? Now, my expectation is that Nasdaq, the way it's been going, probably breaks through, then pulls back, but because it broke through resistance there, it's likely to then continue the upward trend higher. And that, of course, would drag along the Dow and every other market. And so I'm feeling pretty good about the market. I think in the very short term, you'll see a little bit of a pullback because we are at that resistance level, but I like it longer term. S&P 500, almost exactly the same chart situation. We're right at resistance. Don't be surprised if we maybe get another 1 or 2 up days and then a pullback, but ultimately I look for the market to continue higher like that. All right, continuing on, this is a chart of the TSX 60, and you can see that it too is actually getting right up to resistance there. We could get a little breakout, pull back on some profit taking as people second guess the higher prices that they're paying for stocks, and then we'll get that move to the upside. So the long and the short of it here is that probably see some short-term weakness in the next couple of days, but looking out a couple of weeks, this market is likely to go higher. Now, it's always that potential that we do get stuck at resistance and grind sideways for a while, but I do like how the market is looking. This is a chart of the US dollar index, and it's rolled over a little bit in the last few days, but that upward trend line on the US dollar index is still intact. And so look for it to kind of come back into here and then bounce off of that and move higher. It's going to outperform most of the world currencies, but something like the Canadian dollar is looking equally strong. And I think the Canadian dollar and the US dollar are the places to be in the next little while. Well, that has been the Stockscores market analysis for March 8th, 2010. For more information on the tools, services, and courses that we provide, please check out www.stockscores.com. Have a great week in the market and trade well.